A new energy is buzzing through the crypto markets. We're on the edge of a new alt season, but this time, the catalyst isn't a meme coin. It's BlackRock. The world's largest asset manager is moving beyond Bitcoin, building on major altcoin blockchains. BlackRock's involvement is a green light for other big investors. Now BlackRock is fueling a perfect storm for a market rally. The line between traditional and decentralized finance is blurring fast. Let's dive into how BlackRock's moves could reshape the entire crypto landscape. To understand BlackRock's new direction, you need to know about BUIDL, a tokenized money market fund. BUIDL fuses traditional financial stability with blockchain efficiency. Each token represents a share in a fund holding safe assets like US Treasury bills, paying daily yields to digital wallets. BlackRock launched BUIDL on Ethereum in March 2024, but the real story began when it expanded to other blockchains in November. This wasn't just about more choices, it was a strategic move to use these blockchains as rails for a new tokenized financial system. By doing this, BlackRock is stress testing and validating these platforms for institutional use. This is part of a powerful trend, the tokenization of real-world assets, RWAs, making them more accessible, tradable, and transparent. BUIDL turns shares of a money market fund into digital tokens, laying the groundwork for a future where stocks, bonds, and real estate could all exist as tokens. For the average person, this means the technology behind your favorite altcoin is now being used by the world's largest asset manager. BlackRock's expansion of BUIDL is about utility, not speculation, driving real demand for these blockchains. It's a vote of confidence that these ecosystems are becoming essential pillars of a new financial age. The implications are profound. BlackRock is building the infrastructure for a tokenized future. This is why the market is buzzing with excitement. The world's largest asset manager is now using blockchain to move and manage real money. The bridge between old money and new tech is being built right now. BlackRock's BUIDL expansion wasn't random. It carefully selected top blockchains as partners in its tokenization strategy. The chosen networks, Polygon, Aptos, Arbitrum, Avalanche, and OP Mainnet, are all known for high speeds, low costs, and strong developer communities. Polygon, Arbitrum, and OP Mainnet are Ethereum Layer 2s, offering efficiency with Ethereum's security. Avalanche is a direct Ethereum competitor, known for rapid finality, while Aptos is a new chain built for safety and scalability. BlackRock isn't betting on one winner, it's embracing a multi-chain future, where assets move seamlessly across networks. This approach signals that the blockchain wars may end with a group of collaborating victors, not just one. The market's reaction was explosive. Tokens like Polygon surged nearly 30% after the announcement. This is the BlackRock effect. Its endorsement acts as a seal of approval, attracting new capital and attention. For these projects, being chosen by BlackRock means a direct pipeline to institutional liquidity and a central role in the tokenization of real-world assets. It's a game-changing validation that sets them apart from thousands of other projects. BlackRock's choices are shaping the future backbone of digital finance. The firm's multi-chain strategy is a sophisticated bet on the next era of crypto. These blockchains are now at the center of institutional adoption. BlackRock hasn't abandoned Bitcoin. It's running a dual strategy in digital assets. On one side, Bitcoin is treated as an investable asset, like digital gold. The iShares Bitcoin Trust ETF lets investors gain exposure without the hassle of crypto exchanges. BlackRock's research frames Bitcoin as a unique portfolio diversifier, with properties like fixed supply and decentralization. For traditional clients, Bitcoin is the primary digital asset for long-term value. On the other side, BlackRock's altcoin strategy is about using blockchains as technology, not just speculative tokens. The BUIDL fund's expansion to Polygon, Avalanche, and others is about leveraging these networks as rails for tokenized financial products. BlackRock isn't telling clients to buy altcoins directly. It's using their technology to move real assets. This distinction is crucial. Bitcoin is the asset, altcoin networks are the infrastructure. The two-pronged approach lets BlackRock serve both conservative and forward-thinking clients. For now, the firm is investing in Bitcoin as a new asset class and building on altcoin networks as the foundation for a new financial system. BlackRock's strategy is about convergence. Eventually, these worlds may merge. But today, it's walking two parallel paths to shape the future of finance. When BlackRock moves, it creates tidal waves, not ripples. This is the BlackRock effect. Its decisions bring credibility and open the floodgates for conservative capital to enter crypto. The launch of the iShares Bitcoin Trust drove Bitcoin's rally in 2024, and the BUIDL fund's expansion sent altcoin tokens soaring. BlackRock's involvement signals long-term viability, attracting investors and developers alike. Beyond price action, the BlackRock effect accelerates adoption and innovation within chosen ecosystems. These blockchains become foundational layers for global finance, driving real demand for their native tokens. For everyday investors, BlackRock's choices act as a curated list of institutionally vetted projects. While not a guarantee of success, it shows these platforms meet high standards of performance and security. Retail investors can focus on projects gaining traction with the world's most influential financial players. The BlackRock effect is reshaping the crypto landscape for everyone. Altseason describes when altcoins surge, often outperforming Bitcoin as capital flows into higher-risk, higher-reward projects. It's not just random pumps. Altseasons are driven by powerful narratives or technological trends. Past altseasons were sparked by ICOs, DeFi, and NFTs. Now, institutional adoption and tokenization of real-world assets are the new drivers. BlackRock's BUIDL expansion has created a premier league of altcoin platforms, making investors more confident in these ecosystems. As money pours in, developers build more, users flock, and the entire ecosystem grows. This success inspires investors to seek the next big altcoin, spreading capital further. Altseason brings opportunity and risk. Valuations soar, but fundamentals matter more than ever. The current trend is rooted in real-world utility, not just speculation. This could make the coming altseason more sustainable, focused on platforms with strong technology and adoption. The market is maturing and institutional moves are leading the way. BlackRock's journey from crypto skeptic to market leader is remarkable. For years, CEO Larry Fink doubted digital assets, viewing them as volatile and risky. But as client demand grew, BlackRock's stance evolved, slowly, deliberately, and strategically. The launch of the iShares Bitcoin Trust in January 2024 was a turning point, bringing credibility and massive demand. This marked BlackRock's shift from observer to active participant. Next came the BUIDL fund on Ethereum, signaling interest in blockchain technology beyond Bitcoin. The November 2024 expansion to other blockchains showed a clear path to embrace Bitcoin, then build on altcoin tech. BlackRock's step-by-step approach reveals a long-term vision to be a central player in digital finance. Their journey is a testament to crypto's growth from niche speculation to institutional-grade technology. Even the most powerful financial players now take digital assets seriously. While BlackRock makes headlines, Grayscale's Assets Under Consideration list offers more clues about institutional interest. Updated in October 2025, this public watchlist shows which digital assets Grayscale is exploring for future products. It's a barometer for where serious institutional interest is heading next. The list overlaps with BlackRock's picks. Aptos and Arbitrum are on both, confirming their status as top platforms. It also highlights new contenders like Toncoin and Polkadot, and dives into DeFi, AI, and interoperability projects. Grayscale's list helps investors spot the next wave of high-potential ecosystems. By comparing BlackRock's actions with Grayscale's watchlist, investors can see where smart money is flowing. This information helps look beyond hype and focus on projects with real institutional traction. Following these breadcrumbs can reveal the future of institutional crypto adoption. BlackRock isn't picking a single altcoin winner, it's betting on the ecosystem. Expanding BUIDL to multiple blockchains is a vote of confidence in a multi-chain future. This strategy diversifies risk and fosters innovation, positioning BlackRock to benefit no matter which chain leads. The message the future of finance will be distributed across key interoperable platforms. For investors, the question isn't which coin, but which ecosystems are institutions building on. Institutional embrace is about technology that works, scales, and is secure. Price appreciation follows real adoption and utility. BlackRock's approach signals a maturing market, shifting from speculation to utility. The firm is cultivating a garden of powerful technologies, confident the ecosystem will flourish. The integration of blockchain into global finance is no longer a question of if, but when, and BlackRock is building the bridges.